Well, certainly a lot to unpack there, so let's get right into it. I'm joined live from New York by Anthony Chan, former Chief Economist at JPMorgan Chase. Good to have you back.
Glad to be here.
So a lot going on. So I want to start with the stock market's initial reaction to Trump's positive COVID test, especially so close to a presidential election.
I think that certainly when you get that much of uncertainty in one burst, the markets are going to be very nervous because it now raises the question as to who will be the presidential candidate. There will definitely be a shift. We don't have as much information on Vice President Pence as a potential contender. So there was a lot of nervousness. You also saw the VIX index, which is considered a risk gauge. Some people call it the fear gauge, shooting up. All those things suggested lots of uncertainty on top of the other uncertainties of a fiscal stimulus package. And then, of course, the looming employment report. So before the market opened, there was a lot of nervousness.
Now, we know the White House is saying that Trump is still in charge, and while at Walter Reed Hospital, where he's expected to have a setup, is going to keep working. How will this event, though, affect progress on some of these pressing issues, like the stimulus talks for Americans and businesses?
Ironically, I actually believe that this situation, however dire it may actually be encouraging with regard to fiscal stimulus. I think that right now, with the president not being able to campaign, he certainly needs some excitement to re-energize the campaign. And the way you re-energize the campaign is certainly by providing some fiscal stimulus and be able to say that some sort of a deal was made. I think that for both political parties, they certainly have something to gain by making some sort of a deal. And by the way, the financial markets believe that the probability is increasing. It's not guaranteed, but you saw that the markets closed down for the day, but certainly nowhere near the lows in the pre-market or certainly in the beginning or the early hours of the trading day. So it was encouraging. And then I was also encouraged by the fact that the banking stocks did very well. And usually the banking stocks do well when the expectation is that the economy is going to grow a little bit faster. And that can only occur if you have stimulus. Otherwise, the fourth quarter is going to slow down very dramatically.
So then as we take a look at the Wall Street to Main Street connection, let's look at the labor market. What's your reaction to September's job numbers as well as the unemployment rate?
What I see in this employment report is that we're still continuing to create jobs. As you stated correctly, 661,000 jobs is not bad. But certainly over the last couple of months, what you see is a slowdown in the increase. And you saw that 2 months ago, there was a 50, in the last 2 months, you've seen 56 and then 34%. Almost every single month, you've seen less jobs being created than the month before. So with this month's numbers, 56% less than the prior month, that was pretty disappointing, lower than expectations. And one other point that I think needs to be made, and that is that with the drop in the labor force, if those people don't have jobs, if you would have counted them as being unemployed, the unemployment rate would not have changed. It would have remained unchanged at 8.4% instead of 7.9%. So that really tells you that something is wrong, that things are in fact slowing down. And then the final point I would make is that a lot of people thought with the elimination of the enhanced unemployment benefits, a lot of people will rejoin the labor force. They'll go back because there's no disincentives to stay without a job. And yet, what did we see? We saw that more people dropped out of the labor force.
Right.
So that is telling you something is wrong. And by the way, the percentage of permanent job losses continues to increase, which is another red flag.
And unfortunately, we did see a number of companies, including American Airlines, announcing thousands of layoffs this week. So break down this week's layoffs and how will we see that reflected, being that this is the last monthly employment report before an election?
Well, again, it ends on a good note because you saw the unemployment rate go down. What I'm more concerned about is if we don't get a stimulus package, those airline layoffs that you mentioned will in fact come to fruition. The airlines have said that if we get a fiscal stimulus package, even in the next week or so, they'll recall those employees back. And then the good news for the campaign is that they're not going to see the extent of all these layoffs, these airline layoffs. That'll be in another employment report that'll come after the elections. But it would be very nice for both political parties to say before the elections that they did something for the 12.6 million people that remain unemployed in the United States, looking at the household survey.
So, Anthony, what have we learned during the pandemic about remote work, productivity, and certain sectors' survival chances post-COVID-19?
Well, I think that in this post-COVID-19, there's going to be a lot of changes. Right now, if you look at some of the restaurants out there, some of the activity data suggesting that as many as 60% of all the restaurants that are closed may remain closed permanently. So there's going to be a lot of changes. A lot of the brick and mortars are not going to come back to where they were pre-COVID. So there has been a huge transformation, online activity. More people are going to be working at home. You're seeing real estate doing well, but it's in the major cities like San Francisco and New York, you're seeing people gravitating to the suburbs. So there's a lot of changes, and those changes, yes, some of them will come back, but not entirely back to pre-COVID days.